one of the most difficult things to do in life is talk about yourself. I'm really challenged to do so today. My name is Edward Ndichu, but I go by Eddie Ndichu. Eddie is easier. Not with a Y, I-E like Eddie Murphy. I was born and raised in Mombasa, so I do have that thick Swahili accent. If I can switch it on when I have to. But I then very quickly moved on to high school and then university, but my university was out of the country. I was in Australia for 15 years. I studied mathematics, statistics, and information systems. Back then, what you'd qualify as computer science, although what we learned then is completely not relevant anymore because that's a long time ago. Technology has evolved quite significantly over time, over the last 20 to 25 years. I worked for some time in Australia, then I came back, and I worked for, my career in technology started in manufacturing. I worked for Lafarge in Bamburi. We did some amazing products when I was there as a management trainee, my first job. I truly believed that technology can transform not only the country but industries across Kenya at a very young age. So my passion has always been applying technology. It's one thing to train in technology. Applying it requires you to understand industry and see where to apply it. So I see myself as very optimistic, even though I do see the good in people. I am very optimistic, but as you go through life and its challenges, it pushes you to be very pessimistic as you get disappointed through life. But where it soft landed me is really being a realist. I've loved technology from the day I finished high school, and I quickly learned that applying it is where I want to focus my life and my career. And it's been fairly successful. So I started off with Bamburi. We built the first mobile service. I think it was a time mobile penetration was getting very high, where you would receive a very simple service. The truck driver would receive a message when the truck gets to the plant to pick cement. I could see what mobile was doing and what impact it could have in the country and in people's lives. So I quickly changed industry into banking. And that's where I've spent majority of my career, in banking and financial services. I started off very naive about banking, but I did join a very good bank. I was very fortunate, Standard Chartered Bank, where I was able to develop new products and manage services that really were supposed to transform the bank. And that's what you call the alternative channels or digital channels. So I was able to build the mobile banking for Standard Chartered, build the online banking for Standard Chartered, and also manage the ATM channels. So these are the non-bank channels that customers could access to access financial services. And we did this with an amazing team. I've always been fortunate to have a very good team to work with. I even built the first branch for Standard Chartered that had no tellers. It was very bold of us, very daring, where we expected customers to completely use self-serving channels, mobile internet or the machines to access financial services. I was hungry. I was very hungry. I could see mobile money and how fast it's growing. And we did try to push the bank quite a fair bit to take notice of what mobile money is doing in driving financial inclusion and giving people access conveniently to financial services. I switched to another local bank with a very aggressive project to build a mobile virtual network operator business. The bank doesn't exist anymore, unfortunately. That was Chase Bank. But it was at the time Equity and Equitel had come out, where we were very excited about the opportunity of giving customers a SIM card that had a bank account inside. And they can be able to access financial services with their mobile phones wherever they are, as well as telecommunication services. I worked very closely in that bank with the late Bob Collymore. He was my mentor. He quickly, of course, as my mentor, coached me into moving into a larger bank where I would have a bigger impact. So I joined Kenya Commercial Bank, KCB, to do two things. One is, how do we transform the bank? And two, run the fintech business as a completely separate business to KCB. They had started with mobile banking, they'd seen the growth. And for them, it's how do they completely transform the bank and focus on delivering services using mobile and the internet and new channels, but even more interestingly, build new products. So as a director at KCB, leading the fintech conversation, but also developing the mobile business as a separate business to the entire bank. Of course, largely to compete with M-Pesa, and that's where I got my most experience, working with boardroom members or boards, working with senior level management, working with the regulator, Central Bank of Kenya, very closely, because some of the products we were trying to build were very new and had not been done before. So we built, as you would know, KCB M-Pesa, which is an account on your SIM card, with a very great team. And in a matter of 2-3 years, we had 15 million customers. At some point, we were doing more loans than the entire business and retail loans of the entire bank, purely at the mobile phone. My board directors used to tease me because of the non-performance. So we would do 10 to 15 billion, but every month I would have 1 billion of non-performance not being repaid. And they would tease me, you stood on top of Kencom and thrown 1 billion of customers' deposits. But that was on a light note. We did some amazing things, and towards the tail end, we did propose with my team a new kind of product that would complement KCB M-Pesa because of the non-performing numbers. And we called it Okoa M-Pesa back then to mirror Okoa Jahazi, but eventually the product, as you know, it is Fuliza. Some great minds went into it, and we built a great product, and it's as successful as it is today, from the thinking of the teams between both Safaricom and KCB to develop this product. At this point, when I was towards my tail end at KCB, I was poached by an internet company, a global internet company, to rethink financial services being delivered not by a financial institution or a bank, but by an internet company. This was Opera Software. Opera Software are known for their browser in entry-level smartphones. Entry-level smartphones are usually very light, and they need a very light application or browser to be able to allow those people using the internet or wanting to access the internet to be able to access it without consuming a lot of data. The product they had was Opera Mini. I don't know if you guys ever used Opera Mini, but they had good numbers in the continent. So I was hired to very quickly figure out how do you deliver financial services to the 100 million people who are using Opera Mini across Africa. About 25-30 million in Kenya were using Opera Mini. So we built some interesting products. We tried to build OPay. Licensing took a while. It was very difficult to get past that licensing, but the product and the platform were very successful in building. We built digital lending platforms like Okash, which did very well. Went over to Nigeria where we could get licensing and worked on OPay, and it delivered, and it's now probably one of the biggest mobile payment services in Nigeria. And many other things came to play because the vision of our directors at Opera was very aggressive. How do you build with technology very quickly a unicorn out of Africa, given that you have a base of 100 million customers? So we built O-Food, O-Ride, name it, as auxiliary services to support the payment services, the financial services. So I was in Murdoch University, it's in Australia, Perth. Murdoch University, it's in Australia, Perth, where I did mathematics, statistics, and information systems. I recently, last year, graduated from MIT. I did my postgrad for about a year from Cambridge, Massachusetts Institute of Technology. It was very difficult going back to school after 15 years of work experience. I was a management trainee at Lafarge Bamburi. Well, I was in charge of all channels. I was head of proximity and remote channels in Standard Chartered. And then in KCB, I was head of digital financial services. Having had experience in banking and trying to transform banks. So when you're trying to change the traditional way of doing things, you naturally have an innate skill of being creative or being a pusher, to be quite honest, or being able to drive transformation. And from that, entrepreneurship grew. And we realized after working for so many years with my co-founder that we can actually, there's a gap in the market and we can actually build our own financial technology company. Remember the time I was with Opera largely being owned software by the Chinese, I got to spend a lot of time in Asia and in China. Also working as a lead for fintech at KCB, because we did go by the same platform, G2R3, which is the same platform as what M-Pesa uses from Huawei. So I did spend some time in Huawei. And because of that exposure, we realized that even though payments is growing very fast locally in the country, there's a gap with how payments are done in and out of the country. So we quickly incorporated the company. But we incorporated it first in Singapore in 2019, where we were able to connect with friends. And these friends who are also in fintech were able to give us support on how to incorporate and start operations out of Singapore. We later did get support from the regulator in Singapore to begin operations. We quickly built the technology, which was a payment gateway, because at the time I was in China, I got the APIs for WeChat. WeChat is like the WhatsApp and the M-Pesa for China. And we had the APIs for M-Pesa. So we built very quickly a very simple gateway for sending money from M-Pesa to WeChat and WeChat to M-Pesa. And we're very proud and excited about that because that code for WeChat was in Mandarin, it was in Chinese. So we had to quickly set up a team out of Beijing, a technology team, build a platform, and allow for technology to begin operations. From Singapore, we came back to Kenya and said, as native Kenyans, and said, we also have to kick off operations out of Kenya. But of course, you cannot kick off until you're fully licensed by the central bank. We incorporated Wapi Money Transfer Limited, and we applied for our license in the same year, 2019. The license took 3.5 years. So we've been operating under 2 years, between 2023 and 2025, out of Kenya, because that's where we got our license. However, because of being approved to operate out of Singapore, we were able to process transactions. Now, our focus was really outbound payments going out of the country into focusing Asia, what you call the Global East, and our target was China. If you look at payments that come in, they are only a fraction of what payments go out. It's about 1/5, so 5 times amount of payments go out, and they go out very painfully through very inefficient banking infrastructure, which is called correspondence banking, and it takes a long time. So it's 3 to 5 days. It's very painful when a supplier here is trying to make a payment into China. And that's the opportunity we saw when we wanted to start with what you would call as our playbook. So we both left with my co-founder, very well-paying jobs, but we had some good savings. We put in all that we had into setting up the business. In between exiting the jobs and starting the business, so, there was that gray area. We didn't have an office. We were working from our homes and working out of on top of restaurants. And there's only so much coffee you can buy or drink in a restaurant. So we would move from one restaurant to the other. And we didn't want to seem like we don't have a job in the house. So we needed to wake up every morning and look like you're going to work. So it was very difficult. Okay. Again, we're dealing with, we want to do payments. We want to do payments out of the country into an area we not only have never lived or even understand or even speak the same language or even know how their currency works. So we had to do a lot of figuring out, and we said we're going to start with the Kenya-China playbook. Thankfully, because of the friends out of Singapore and out of China from our time there and exposure there, we're able to better understand how that infrastructure on that side works. How do you successfully deliver money on that side? For Kenya, it was straightforward. We knew how the environment worked. I can say we started with about $50,000. But here's the thing. I cannot tell you until today, 4 years later, how much money we have kept putting in. So it may look like 50, but at some point you stop counting how much you're putting in, because developers have to be paid. Cloud services have to be paid. You have to look for an office. Revenue hasn't started coming in. So you go into your own pocket every month. At some point, we used to document it. It was personal savings, purely personal savings.
You
and my co-founder, yes. It was purely personal savings. And we would live hand to mouth. So there was other residual, of course, incomes, because we did have families that we needed to support. But we would pick money from there and put it back in the business. Whatever revenue you make, you bring it back this way. So it was not easy. It was very hard. There were times we dusted the CV and put it out back in the market to look for jobs. Because we realized that this might not work. But it was a very difficult time. Now we try to rationalize how much because of financial reporting. And that's when I think we moved from being a fintech, as what people know, a startup fintech, into a fully licensed financial services provider, because that's what we are now. Because we now have a license in Uganda, we have a license in Nigeria, we are approved to operate out of Singapore, we are approved to operate out of Hong Kong, and we are continuing to expand the jurisdictions and the countries that we are allowed to operate our business. So we started out with a very small amount. We've been injecting a lot of money. We got licensed. We stopped being a fintech, and when operations start, you need governance and oversight. You now are a fully fledged financial services institution. And we did raise immediately after getting our license what you call a pre-seed funding. The pre-seed funding was just under $3 million, and that's what really supported us to operationalize the business model. Because what really worked, I think, for us, even when we were working out of restaurant, is that customer number one. It is not even the technology that we built. And I think a lot of people think your business will be successful if you build a good technology. It took us 3 to 4 months to just build that simple gateway that sends money between M-Pesa and WeChat. But we never saw transactions. However, coming back to Kenya, when we got the first customer, without even exposing the technology to that customer, we were able to deliver a cross-border payment or transaction into China. And that's where we knew there is demand for such a business or such a service. And that's where we started constructing the business model. Really the cross-border payments, focusing on outbound and the global east, from India all the way down to Indonesia, but starting with China. Wapipay, Wapi in Swahili means where, as you would know. Wapi in Swahili means where. And our business model is to put it to the world. Where in the world do you pay? And that's how we came up with Wapipay. Largely between my co-founder and myself, realizing there's a pain point here in how Kenyans are able to make a payment out of Kenya. They are relying, of course, on their banks, and they are relying on a four-party bank model called the correspondence banking model. If we're able to focus on remittances out of the country, the same way remittances are done into the country, we can solve a problem for a lot of individuals and businesses. Our first customer was a business, and I would say for the outbound payment, 65 to 70% are businesses. For the inward payment, we have since opened inward payments early last year, is about 40-45% of our volumes in our business. So we came up with Wapipay to try and answer that problem. Where in the world would a Kenyan pay? And we bumped into so many problems and challenges. One of the biggest one is foreign exchange. When somebody wants to pay outside, they're usually quoted in a foreign currency. And usually their desire to make that payment supersedes their desire to consider whether or not they could make a cost saving in doing that transaction. When somebody tells you you need to pay $1,000, you need to pay 1,000 CNY, you walk around the streets and around the banks and try and figure out where you can get this $1,000 or 1,000 CNY. And you will be willing to give out as much shillings as you want, because your priority is making sure that payment is done. So a lot of Kenyans were losing 15 to 20% of the value of their Kenya shilling by the foreign exchange transaction that they have to do. Because before even sending, you have to convert into foreign exchange. And these are the things and the lessons we've learned at Wapipay. How do you reduce that cost of exchanging that Kenyan currency into foreign currency down to 3-5%? How do you allow that transaction to happen in 5 seconds? And that's what we've been very successful with doing. So that's how we came up with Wapi, largely my co-founder and myself, focusing on there's a bigger pie in payments, and not just person-to-person payments locally. There's locally people wanting to receive money and from out of the country, and there's locally people wanting to send money out of the country. And that's how we came up with Wapipay. Where in the world do you pay? We've worked with quite a number of businesses. I'm not sure if I should comment the names of those businesses. But they are businesses largely in construction, manufacturing, import and export. And you can understand why, because they need to do the payments out of the country. We've worked largely with Chinese companies. A lot of the contractors, Chinese contractors locally, needing to do payments into China. We've been very fortunate to work very closely with them. The better question and the more interesting question is why they choose Wapi. And I think it's this business model that we were able to build from day one for our customers. Using the remittance model to have a pre-fund, and I'm sorry to sound technical, to have a pre-fund on the other side where it needs to be paid and collecting here locally, as opposed as to doing correspondence banking like how banks currently do it. Number one, we do the transaction in 5 seconds. Number two, you save up to 10% in exchanging your Kenya shilling into whatever foreign currency that you require to be able to make that payment. And then number three, something we're passionate about is operational excellence. Operational excellence is something a lot of people in the services industry really try to achieve, especially in banking. When you think about how responsive you are to customers, we're able to respond to customers within 5 to 10 minutes. We're able to provide a technology that has an uptime of 98%, right? Of that technology, delivering 98%, we have a 99% success rate on our transactions, right? And then our business model goes to, or is structured to first verify where the payment is going before just simply pushing it from the sender side. So I would say operational excellence, I would say saving on the currency exchange, and I would say the speed on how we deliver the transaction, whether to mobile money or a wallet or a bank account. Like I said, we got our license in 2023, which is the year before last, and that's when we, at the middle of the year, really started operations. So we've been operations just under 2 years. I'd say just over 18 months. And what we started off very quickly is continuing with our outbound business, and then money payments being done out, and then going into payments coming in. We've grown our payments coming in quite aggressively. So last year we had a very successful year. We did so also the year before when we started. when we operated just half of the year 23. We had over 600% growth, 600x growth last year. Last year, about $5 billion worth of remittances were done. Now this is important, Boniface, because $5 billion is more than the tea, coffee, and flowers that we export in value. So remittances into the country are worth more than the tea, coffee, and flowers put together that we send out. It means that we're better at sending our skills and labor than we are at sending commodities and crops, which is an interesting antidote. So of that $5 billion, we do about 20 to 25% of that, right? So last year with the 600 times growth, we did just over $500 million. Because of that growth, and we've seen every year remittances will continue to grow, and that's our total volume. We do about 100,000 transactions per day, and in the last 18 months, we've been able to process remittances for over 1 million individuals and businesses. Our projections, so therefore, after last year's, great performance by the team, is to process about $2 billion by December 2025. 500 to 2 in a growing market, I don't think is too ambitious. And in fact, we did a report, a joint report with the State Department of Diaspora Affairs and the UN agency called IFAD for remittances. I'll share with you guys the report. You can also dig into it. But we focus on the US corridor. The government is targeting to move from $5 billion to $10 billion in this dispensation of the current government. And $10 billion, I would round it as 1 trillion. So we call it the journey to 1 trillion. So what are the challenges and the issues in doing these remittances that we can solve through technology to accelerate these remittances to that 1 trillion. So our target of $2 billion is within reason, I think. Remittances as a business, or cross-border payments as a business, has been a very nascent area of payments. People only know mobile money, M-Pesa to M-Pesa. When you think about remittances, the Act came in 2013, Money Remittance Act 2013. And it was largely to regulate people doing foreign exchange. So a lot of the players in the market purely focus on foreign exchange. So we are licensed to open forex bureaus across the country. So down here you've seen Taj, Westlands, you'll see very many forex bureaus. We could easily put forex bureaus all over Westlands, in Mombasa, at JKIA, but we chose a different strategy. We chose to deliver both foreign exchange and remittances digitally through technology. And that's where we differentiate. The way we differentiate in the market, and there's not many, if at all, who focus 100% their strategy on away from the physical exchange of currency and sending money into a digital one using mobile and the internet. When you think about Western Union and MoneyGram, if somebody sends you Western Union money through Western Union. They'll SMS you a code, and then you have to look for a Western Union branch, whether a Forex or a bank branch, and you give them the TCN number and your ID, and that's where you get the cash. So for us, we're not doing that. We're delivering the money directly to your M-Pesa, Airtel, or T-Cash. We're delivering money directly into your bank account. And that cuts across all the markets that we operate. So between Kenya, Uganda, Nigeria, Ghana, soon Zimzambot, which we call Zimbabwe, Zambia, Botswana, and South Africa. So the current environment is we're edging it and we're trying to push it to go digital, to make it more efficient, because that's the only way we will reduce the cost of processing this transaction. We will provide convenience to the customer in receiving this money. And that's where I would say we differentiate with the other players in the market. The other challenge we have in the competitive landscape is access to liquidity. We do rely on a pre-funded model and not a net settlement model, which means the money that people are sending has to be available for the platform to actually transact. So it's one of the biggest challenges in cross-border remittance industry that we face today. And finally, the inefficiencies of the banking industry. I know I'm going to sound controversial, but why are there cutoffs? Why do I have until only 3 p.m. to send money? I'm sure you've faced personally these issues. In even not so developed markets like Nigeria, there's nothing like cutoffs. You can send money at any time because they have a very good switch called DIBS that allows them to send money. So the inefficiencies of our banking industry in terms of how it pays each other puts us at a disadvantage and challenges our business model, because our technology is able to process in real time, is able to do auto reconciliation, and is able to do net settlement. I'll give you an example, Kabui. Who do you bank with? Equity. Who do you bank with? COP. Let's pick COP. When Kabui is sending Boniface money from your equity account to your cooperative account, does equity have some money available in a cooperative account so that it can pay Boniface when you initiate the transaction?
It has to give the other guy signals. I want to proceed.
Yeah, the banks are doing net settlement. Yeah? The banks don't have to be holding money in all the other banks just in case their customers come and want to deliver that money in those banks, right? But unfortunately, the way the infrastructure has been built for digital transactions, it relies purely on pre-fund, and that puts us at a real disadvantage. And unfortunately, because I can only do the transaction before 3 p.m., that transaction won't happen until the next day. I'll tell you another challenge. Where we are now, we're talking about money coming in and out of Kenya, right? Where we are now in Global South in Kenya, the US are not awake yet, right? So they're waking up maybe around now. Yeah? So the transaction, they will raise it, say around 1, 2. By the time they raise it, when it gets here, and I need the money to move to a beneficiary, I literally have 1 hour. Right? Now think about it this way. I needed to receive that money so that I can move it. I only have 1 hour to transact, and I need to send the money to China. Do you know what time it is in China? They're eating dinner. They've already left the office. So the real problem we have is because of these inefficiencies, we're not able to orchestrate real-time cross-border transfers from the west to the south to the east to the north. It doesn't matter. And these are the challenges we've taken up quite aggressively. Let me put it very categorically. We have a very good relationship with the central bank. In fact, we have the most forward-thinking central bank in most of sub-Saharan Africa. Because they operate and manage a very good economy, a very strong economy. They are actually working very hard to fix this problem. And they've involved even me, myself, to support them. How do we build beyond PesaLink? How do we build into real-time transfers between bank accounts? So they are working very hard to fix these inefficiencies. They realize that they have to be very aggressive with also the banks to participate. Because at the end of the day, the regulator will just write a policy, right? But the people who need to be following that policy and using whatever system that is provided also need to be to move. So I'm very proud of the regulator, and they're working very hard. Secondly, they're working with us to try and solve that problem, because we're the ones who are going through the problem, and they very clearly understand what the challenge is, and more importantly, where the opportunities really are for the consumer and the economy to grow, and businesses as well. At this moment, I wouldn't say there's anything that they need to address. I think I mentioned before there are some interesting bills being debated. There's the AI bill, and that's very exciting. Some of the most topical things globally, of course, is AI. And then there's the virtual assets bill that the Treasury is debating and released, which is largely talking about crypto. So these are two very interesting conversations around the business of financial services and how we deliver them efficiently through new technology. Public participation of licensed entities, I think would be a very interesting conversation around how those bills are debated and come to effect, and then how do you provide governance and oversight so that these new technologies like blockchain or AI are able to be used in financial services. You could come up with an idea or a thought for a solution. The best advice I would give is to test it. Don't wait to have the best technology or the right technology. What I would say is first test it. And the reason why you're testing it is because you're trying to construct a business model around that solution. And once you test it, you're able to get feedback, whether or not it was even needed, and whether or not it can actually grow. So that's the one big push I would put out, that people test the idea. I think I did mention on our turnovers, 500 million last year, and that it's a 600x growth from last year, from being in operations for only 18 months. It's not an easy achievement for the team. They've done really well. And we've managed to do this with a very lean team of just in 2023, just over 10. In 2024, just over 15. And then now we're scaling up to grow to a team of 50 by the end of the year. 99% of our transactions are in 5 seconds. 98% uptime in our technology. And finally, over 1 million customers in just under 18 months. When we first started our first office, we had zero furniture. We were sitting on plastic chairs, the outdoor plastic chairs. And we had taken up a premise. I don't know if you've ever taken commercial rental for office space. They don't give you with anything. There's no even floor. So we sat in an office, a very small office with no floor, and sitting in plastic chairs for over 6 months. And we slowly started growing the team. We brought in somebody to help us with finance operations, somebody to help us with support for our technology, and slowly grew the team into that level. Remember, we have a 7-man technology team sitting in Beijing, and then we have 2 people sitting in Singapore as well, who help us with the foreign exchange, the buying of these currencies for Asia. And then we have now 2 people in Uganda, 3 people in Nigeria. So the team is growing, not just in Kenya, but of course globally. And we moved from that office in the anticipation of the aggressive ambitions we've set for ourselves to process $2 billion. And we worked backwards to process $2 billion. Not only do you need more staff, but you need a very motivated team. So we thought to create an open style of environment of working, not your typical office environment, for 2 things. One is collaboration. So this office space is not just for the teams, it's also for the partners that we work with. It's not open to the public, but it's also to the partners that we work with, to give them a space for co-creation. Because they need to not only be in an environment of collaboration, they need to be in an environment of motivation, but they also need to be in an environment of creativity, right? Where they can have conversations, and if there's a small issue with how transactions are happening, they can quickly sit around a booth and sort it out and fix it, as opposed to going into a full project plan and proposal as the way a typical office would go through. So we thought we create an ambitious, a creative and collaborative environment, and I think we've managed to somehow achieve it. 3 things that motivated it, that we always tell the team, and you can quote us: fearless, creative, and careful. Fearless, creative, and careful. Now, sitting here on the 15th floor with such great views in such open, collaborative, co-creation or co-working environment is really to achieve that mission for us, or that culture that we want, for being fearless, being creative, and being careful. And that's why we made an investment and said, given our growth and given the trajectory we want, what environment do we create for teams? Again, we are hiring Gen Zs and youth. Gen Zs and youth are a big part of our workforce, and I can guarantee you they're not too excited about working in the traditional office space. So how do you motivate these teams to be fearless, creative, and careful? We are looking to go beyond cross-border payments and remittances into other financial products, and offer the full suite of banking services and products, typically as you would know them in Kenya, for instance, but all digitally. So we are looking to grow into a digital bank or a neobank. That's our mission or ambition. And hence, of course, even wider space for partnership. We did raise just under $3 million US dollars. However, we have been profitable since 2023. We've not needed or required to raise any more money. However, to scale into the ambition that we want, we are opening up our Series A later this year. I may not be able to disclose how much we're looking to raise, but we are looking to open up Series A after our pre-seed in 2021. AI is a very interesting topic. It's the fastest growing area of technology that has quite a number of promise for all industries, not just financial services. And the way we look at it is that we don't understand it well enough yet, but we're working very hard to understand it. And right now, what it does is that it's just a better search engine and really helps you with research. One thing financial services are very good at is data. So all these transactions I've mentioned to you, 100,000 a day, all these transactions is all data. And what we're also very good at is protecting customer data, because we do maintain customer data. AI is built on the premise of how do you use data to create some intelligence, right? So there's two things we're doing. So we've set up an AI company called Vanguard AI. Vanguard AI is about rethinking financial services with AI. And the team is looking at using large language models, natural language models, to get intelligence from the data that we collect, number one. But number two, we have workflows in the business. How do we use AI to fix the workflows in the business? For instance, treasury. From the time you book a trade to the time, whether spot or not, to the time where you actually receive settlement and actually convert the currency into LCY, local currency. There's a workflow there. Can AI be able to sort out that workflow? Onboarding a customer, there's a workflow. Can AI be able to onboard that customer and we replace that workflow that we currently do it manually? So, you log in the back office and you approve a customer for a transaction. So we're looking at workflows in financial services and using AI to do that. But we're looking at also data that we generate to be able to pull out intelligence, which is really the behavior of our customers, so that we can build better products. And it's something we're very excited about. And we're doing it not even as Wapipay, we're doing it as Vanguard AI, which is rethinking financial services.